All right, we are going to talk about this news right here from the Crypto Basic, where it says US-based investment advisory firm reveals 3 reasons XRP could rally before summer. All right, imagine holding an asset that everyone says is dead, only to find out that one of the most respected investment advisory firms on Wall Street is quietly calling for a massive pre-summer rebound. Right now, the entire crypto market is bleeding. XRP has slid down to about $1.32, marking a painful stretch where it has logged negative returns in 7 out of the last 8 months. It feels exhausting, and most retail investors are throwing in the towel. But while the crowd is panicking, a major stock market analyst from the Motley Fool, Lyle Daly, just published a report laying out exactly why this narrative could completely flip before the summer heat hits. We aren't talking about the hype or rumors here. We are looking at institutional demand, legal transformations, and real world utility that is live right now. So let's look directly at what the big players are seeing. So let's start with the very first question about the impending June Senate vote. Will it be the missing catalyst for XRP? Will this be the missing catalyst for XRP? All right. The first major driver that analyst Lyle Daly points to is the massive shift in the US regulatory landscape. For years, the biggest dark cloud over XRP was the endless legal battle with the SEC. Even though that specific lawsuit wrapped up last August, a lingering sense of uncertainty has kept big institutional money from diving in head first. The market hates a guessing game. That is exactly the Digital Asset Market Clarity Act comes into play. This isn't just another piece of paper floating around Washington. It is a definitive framework passed by the Senate Banking Committee with a strong bipartisan vote on May 14. This bill explicitly builds boundaries, and while the SEC and CFTC already treat XRP as a digital commodity, the Clarity Act would codify this into federal law, making it an official, unassailable legal clarity. So, in my own view, regulatory clarity is the single most undervalued asset in crypto right now. When the Clarity Act cleared the Senate Banking Committee on May 14, we saw a brief glimpse of what happens when confidence returns to this asset class. The price instantly spiked. The bill is now heading to the full Senate floor for a vote this June. If it passes, the regulatory discount that has suppressed XRP's true value for years evaporates. So my take, smart money isn't waiting for the president to sign the bill. They are accumulating right now while the market is distracted by the minor May downturn. Now, why are XRP ETFs seeing record institutional demand while Ethereum bleeds? The second reason highlighted by the analyst involves the quiet explosion of institutional interest through spot XRP ETFs, right? While everyday retail traders are arguing on social media, institutional capital is voting with its checkbook. Daly pointed out a striking contrast from earlier on May. On May 11, spot XRP ETFs pulled a staggering $25.8 million in net inflows in a single day, the highest single day figure since January 5. On that exact same day, Ethereum funds suffered nearly 17 million in capital flight. The report mentions that as of mid-May, XRP's ETF held roughly 1.3 billion in total assets. JP Morgan Chase even dropped a projection estimating these funds could capture between $4 billion and $8 billion in their first year. So in my opinion, here is the part of the story that has developed since the initial report, and it completely blows the analyst's original data out of the water. With only 2 days left in May, XRP's ETFs have not recorded a single day of outflows for the entire month. This is the longest streak of unbroken positive accumulation we have seen all year. In May alone, an absolute wall of money, or $120 million in net inflows, has flooded into these funds, pushing total cumulative inflows to $1.41 billion. This makes May the third strongest month in history, trailing only the massive launch mania of November and December 2025. When you see an asset's spot price dropping while institutional inflows hit records, that is the textbook definition of institutional accumulation. Wall Street is buying the retail panic. Now, how does the Rakuten Pay integration change the global utility game? Right? The third and arguably most explosive factor highlighted by the Motley Fool analyst is the massive real-world integration happening across the Pacific. Last month, Rakuten Wallet, which is owned by Japan's absolute largest e-commerce giant, fully integrated XRP into its Rakuten Pay application. This isn't a pilot project or a theoretical use case. It allows 44 million active Rakuten users to instantly use XRP as a payment method at more than 5 million merchants all across Japan. Furthermore, the system connects directly to Rakuten Points, a massive consumer reward system that has issued over 3 trillion points worth an estimated $23 billion. Users can now seamlessly convert their shopping reward points straight into XRP. In my opinion, this is the holy grail of adoption because it targets the average consumer, not just the crypto native. Think about the psychology here. A massive segment of those 44 million users might be hesitant to risk their hard-earned cash buying cryptocurrency directly on an exchange, but letting them turn their loyalty reward points into XRP, that removes 100% of friction and risk for the consumer. It turns a speculative asset into a practical, everyday transaction tool across millions of stores. While everyone else is looking for speculative hype, Japan is building a structural floor of daily transactional demand that makes XRP incredibly resilient. For our overall conclusion, we have to look at the macro picture. As the analyst from Motley Fool rightly points out, the crypto market is inherently unpredictable, and there are never any absolute guarantees in this space. XRP has felt the weight of a broader market correction this month, sliding to $1.32. But beneath that volatile surface, the structural foundation has never been look strange. We have a massive legislative milestone coming up in the full Senate this June with the Clarity Act. We have an institutional supply shock building, evidenced by an unprecedented zero outflow month for XRP ETFs that has driven cumulative inflows past the $1.4 billion mark. And finally, we have massive commercial adoption scaling across millions of merchant locations via Rakuten Pay. So, the data tells us that the current price action is disconnected from the underlying fundamentals. The Motley Fool's analysis underscores a very simple reality. The tools for a massive pre-summer rebound are entirely in place. The market is coiling, the institutions are loading up, and the next few weeks leading into summer could be some of the most critical moments we've seen for this asset class all year. So we need to stay focused on the macro shifts, ignore the short-term noise, and watch that June Senate floor very closely. And this finally ends our video. Thank you very much for watching and see you on the next one, or you might as well want to check this recommended or suggested video right here.